so looking at all region condos, okay, so this is your condo townhomes, your condo apartments. This is across everything that TREB covers. So many communities all over Ontario, but we want to kind of look and see as a whole how the condo market is holding up, because we've heard on the news, we know that Toronto's struggling, we know that there's certain pockets, but how is it looking overall? So when we look at the median price month over month to start the year, we're down 1.2%. Transaction volumes is is up 1.9%. So that's good to see that we're getting a little bit more volume, as expected though when we're coming from January to February. New listings have decreased 3.2%. So maybe we saw a bigger influx of new listings hitting the market in January. Median days on market is down 40%, which is a good sign. We were going from 40 days to 24 days. Now, typically your Decembers and January is extremely slow. Properties sit on the market for a lot longer. Now they're getting, repriced, potentially terminated, relisted, and they're starting to move a little bit quicker. So termination volume was down 14.5%. Now, when we look at it year over year, we can see, we're down 5.7%. We last year, same time last year was 615,000. We're down to $580,000. Transaction volume is down 28.4%, with the new listings volume increasing by 8.9% to 6,749. When it comes to the median days on market, we are up over last year. We went from 21 days to 24 days, so not a massive uptick, but it is 14.3% increase. And then the amount of properties being terminated, we've seen it go to 1,762, so that's a 32.3% increase. Now, if we look at how this year to this, from January to the end of February, compares to last January and February, we're down 3.6% in the median price. Transaction volumes are down almost 20%. New listings volume is up 20.3. Days on market is up 16%, so from 25 days to 29 when looking at it year to date. And then termination volume is 37.4%. So let's go over to the active listings chart, and we can see the big uptick here. This is since 2011, 2025. We can see just how much more inventory is piling up in the market. And down in the corner, we can see 2025. There's 12,727 properties currently listed, and in 2024 we were at 9,005. So it's quite the big uptick here. We're gonna see if we start to level off. Maybe we just had a quick start to the year. We had a lot of inventory hit the market. Maybe this will stabilize, or we're going to really be piling on. We could see north of 15,000 condos on the market if we're not seeing the buyers come back into the market and absorb them. Now, typically what happens when there's stress in the market is investors are the ones that are going to try and liquidate their properties first. They have their personal residence. It doesn't make a lot of sense for them to hold an asset that's potentially underwater, not making them any money, or maybe there's not even that much equity in the property. I think that's why we're seeing the condo market get hit so hard, is the valuations just don't make sense. There's people trying to get out of it. These don't even account for all the individuals that are trying to sell their units offline in assignment sales, which are more done on the private side. Not all of them, but a good majority of them are done that way for reasons that the builder puts in place on the contract. All right, let's look at new listings volume. So we can see the new listings, like I mentioned before, it started to drop. So maybe we really got a big influx of listings to start the year. We're quite a bit ahead from the previous year. We're at 7,355. whereas 2024 had 6,749. So we'll see if this starts to level out into the year, or if we're going to see another a rise. And then when we're looking at the median sales price, we can see that we're down to where we were about 2021 on prices. We are heading downward. It looks like we're going to potentially break that line. But I would believe that we're going to probably bounce in between 2020 prices and 2021 prices. Now, if the volume of properties gets into the 15, 16, 17,000, then yes, we could see prices get hit a little bit more, as there's so much more supply on the market for buyers to choose from and negotiate with. So that's something to keep an eye on as we're going forward. Let's look at months of inventory. We can see that we're just over 5.1. This was last month, so we've gone up since then. But we can see, if we look back in history, we're the highest we've been since 2011 when it comes to months of inventory for condos. These are quite big movements to the upside. Will we come down and test around here before we shoot back up? I think we're probably going to move our way up until we're about 5.5, 6 months of inventory, maybe a little bit more. And I wanted to highlight Peel region. Peel region, we've seen a massive uptick in active listings, but not only a massive uptick. This green line was 2013. If we're looking at 2024, it's down here, right? We were 812 active listings last February in the Peel region. And then if we look at 2023, which was down here at 529. So we're up 59% more active listings year over year in February from 2024 till now. And we're up 143% more from 2023. So we're seeing massive active listings in the condo space in the Peel region. Now let's go to sales volume in Peel. We can see we're having the lowest sales we've had since 2011. We're down 41% since last year in sales in Peel. So we're getting these new listings hitting the market. We're getting extremely low sales numbers, and the active listings are just piling up in the Peel region. This is definitely a market we need to keep our eyes on and see which way it's heading. Another one I'm looking at is Waterloo. Active listings up 87%. These are huge numbers. They were building a lot of purpose-built condos that were geared towards students in the Waterloo area. Now we've seen the shift in international students, and it's possible that a lot of investors were buying these types of condos at the peak in the market, or just after, and the numbers aren't making sense for them right now, and they're trying to get out. Because 87% increase, it's quite the number. We can see in Waterloo, these numbers typically don't go this high. Last year we saw a massive gyration up to about probably 550-ish. This looks like it's going to overtake that quite a bit. So there's going to be a lot of supply in the Waterloo area.